Earth Day is once more upon us, and the author of a Morningstar report is joining me to discuss it. Sara Silano is our editorial manager for Italy. Sara, thanks for joining us. Just what is the significance of Earth Day for investors?
Hi, Ollie. Thank you for inviting me. This year, Earth Day theme is Invest in Our Planet. We know there is no planet B. Investors, together with companies, government and citizens, must take action on climate. According to the latest IPCC report, the world faces multiple climate risks over the next 2 decades, with global warming of 1.5 degrees Celsius. Even temporarily exceeding this warming level will result in additional severe impacts, some of which will be irreversible. Human-induced climate change is causing dangerous and widespread disruption in nature and affecting the lives of billions of people around the world, despite efforts to reduce the risk. As investors, we must be aware of the fact that environmental risks are financially material for us because they can impact our portfolio risk-return profile. That's the reason why most asset managers today have incorporated ESG analysis to some degree in their investment process.
Sure. Just looking at current events, on matters more military, Russia's invasion of Ukraine has prompted this fierce debate over the role of ESG and arms stocks and national security. But do you think that there's a risk there that global events push the environment to one side?
Yes, Russia's invasion of Ukraine has provoked a lot of discussion about sustainable investing, highlighting the growing influence of sustainability concept on investing in general. And that is something that is good, but something is changing. Think about arms. Before the war, most investors agreed that producing weapons was not especially ESG. But now some investors are making a new case for defense industry and military technologies on moral or political grounds. Another interesting example is thermal coal. Before the Russian invasion, we were stressing the need of phasing it out as a key step in the journey to transition our investment to net zero emission by 2050. But now oil and gas prices have skyrocketed, and there is a debate on revitalizing coal, that is the dirtiest fossil fuel, to tackle the European energy crisis. On the other side, the war underscored the urgency of shifting to renewable energy. It's not only about climate change, but also more clearly about the ending of the dependence on Russia for oil and gas, because that dependence essentially is financing invasion.
Cool. And just finally, we know that thematic investing is a very important part of investing for the planet's benefit. But just generally, what should investors be aware of if they're going to pursue that approach?
Investor interest in the thematic funds has increased dramatically in the recent years, particularly since the beginning of the global pandemic. Europe is the largest thematic market in the world, and energy transition is one of the most popular themes. These funds invest in companies that are helping to solve environmental issues through new products and services. That's good, but investors must be aware that they can have their up and down in the short term, like other strategy. So it's better to have a long-term approach. Moreover, funds that focus on climate action differ from those that take a more general approach, ESG approach, because they may not be as diversified as those with a broad ESG approach. Finally, since the beginning of the global pandemic, many thematic have chalked up impressive returns, but our studies show that most thematic funds don't beat global equity over longer periods.
Okay. Thank you very much, Sara. For more on Earth Day and investing in a planet-conscious manner, check out morningstar.co.uk or indeed any of our European sites, including Italy. Until next time, thanks to Sara, I've been Ollie Smith for Morningstar.